Thanks for clicking. A couple bought their home in London, Ontario at the peak of the real estate market, and with prices plummeting and rates surging, are now calling the purchase a nightmare. London's real estate market hit its peak in February of 2022 and has since plummeted over $200,000. And with the couple buying in March of 2022, right when interest rates started to rise, they have obviously lost a lot of money. And while the story obviously serves as a cautionary tale for potential homebuyers, the CBC article that featured the couple also spoke to a real estate broker about what options similar homeowners might have for their mortgage.
Thank God you sent for me.
Indeed. So what I want to do today is go over the CBC article, take a look at some of the advice being offered therein, take a look at some realistic advice available to current homeowners, and then take a look at what to look for next. Speaking of next, Canada's inflation data is set to be released tomorrow, which will obviously have a big impact on whether or not the Bank of Canada raises rates for the remainder of this year, and we'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this article. Onto the article. The couple that was featured by the CBC purchased a home in the East End of London in March of 2022 for $730,000. All of the experts they spoke to at the time told them to buy a home as soon as they possibly could, whether they liked the home or not.
Why don't you trust us?
Indeed, while in hindsight the purchase price may have been too high, all of those experts, even in April of 2022, were predicting home prices to stay high in London, despite the rate hikes. Yet, while when the couple purchased in London the average house price was $807,000, by the time the couple had closed in June, that average home price had fallen to $688,000. That's a $119,000 drop from the point in time that the couple signed to when they actually closed on their home. And while the major drop in value between the time of signing and the time of closing is one thing, the couple also went with a variable rate mortgage, at a time when inflation was sitting at a 30-year high. At the time of purchase, the couple's payments were set to be at $2,800, but with rates having increased over the past year, are now sitting at $4,400.
Your call cannot be completed as dialed.
While the couple does have an annual salary of $140,000, an extra $1,600 per month is obviously going to hit the budget, especially if they were unprepared for the hikes. So, the couple bought right at the peak of the real estate market in March of 2022, purchasing the home for $730,000. By the time they closed, London's average home price had dropped by $119,000. Since they've closed, interest rates have gone so high that the couple is now paying an extra $1,600 a month in mortgage payments. With that said, in that same article, the CBC spoke to Toronto real estate broker John Pasalis of RealEstate, who provided some options if homeowners find their payments unmanageable. One option, said the realtor, is to lengthen the amortization, increasing the length of time over which borrowers amortize their loan. Pasalis suggests that homeowners contact their lender to see if this can be negotiated, as banks are going to be more likely to negotiate as they don't want to see these bad loans on their books. Yet it's not exactly clear how this would work. A homeowner with a variable rate mortgage and adjustable payments, where their payments adjust upwards or downwards with prime, any adjustment to their amortization would technically constitute breaking the terms of their mortgage, and would constitute a new mortgage, wherein which the borrowers would have to requalify for that amount and would have to pay the mortgage penalty for breaking the previous mortgage. But what about those with static payments? Pasalis, the real estate broker from Toronto, told the CBC that many holders of variable rate mortgages aren't actually paying more each month. And that is true, or was true. As of November of 2022, the Bank of Canada noted that half of those holders of variable rate mortgages with static payments had reached their trigger point, meaning the bank was forcing them to either extend their amortization or increase their mortgage payments. And we've talked about trigger points before on this channel. The trigger point is where your mortgage payment, if you have a static payment, reaches a point where it's no longer enough to cover the interest, at which time the bank can either extend your amortization, if that's possible, or forces you to increase your payments. And the Bank of Canada was warning in November that nearly half of all holders of variable rate mortgages with static payments had reached their trigger point. And as of 2 weeks ago, National Bank was warning that nearly 80% of those who bought between 2020 and 2022 had hit their trigger points, with 90% of those who bought in 2022, like this couple, having also hit their trigger points. So the advice being offered by the CBC vis-a-vis a real estate broker is for homeowners to try to renegotiate their mortgage, which very rarely happens without a requalification and a mortgage penalty, or that the borrowers should have used a different mortgage lender, a mortgage lender that allows variable rate mortgages with static payments. And while I'm sure the ex post facto advice is indeed comforting, the data coming from the National Bank and from the Bank of Canada show that these homeowners would have hit their trigger point probably anyway and would have still seen that payment go up. So it's not clear that the advice being offered by the real estate broker in Toronto is going to work for these homeowners. What these homeowners and those in a similar position should be advised is that it definitely could get worse from here, with the markets now betting that the Bank of Canada is going to be raising rates at some point in 2023, and that they might not be cutting until 2024. Right now, this couple is paying prime minus 1.1 or 5.6%, and as we saw, this could very well go up. However, that couple does have the option to lock in for a 1 or a 2 year mortgage. If they lock in for a 1 or a 2 year, they will be paying close to the same amount that they are now, maybe a little bit more, maybe a little bit less, depending on the rate that's being offered by the bank. But given that the couple is already working at Uber Eats and Instacart in order to make extra money to make that mortgage payment, it might be worth looking into the safety of a fixed rate mortgage on the off chance that rates continue to go up further. 1 year ago, in an article, the CBC was reporting that the rate hikes that we were seeing may not cool the real estate market. 1 month ago, right before the Bank of Canada raised rates by 25 basis points, the CBC ran an article questioning whether or not the bank even needed to engage in that 25 basis point rate hike. 2 weeks ago, experts were predicting rate cuts in late 2023, and 4 days ago, the CBC reported that Governor Tiff Macklem isn't closing the door on more rate hikes this year. So, as we talked about before on this channel, things can change very, very quickly, and these experts, as this couple found out, and as many homeowners I'm sure are well aware, are often wrong. Nobody knows where rates are going to go in the future, whether or not they are going to go up or if they could reverse. But for couples, for homeowners that are in a similar situation as those that were featured on the CBC, the number one thing to be concerned about is the budget. Whether or not you can handle that extra 25, 50, 75 basis point rate hike that could very well be coming down the pike over the next year. This couple, and I'm sure many other homeowners, are in a very tough spot. They received some bad advice at the beginning of 2022 and probably 2021 and are now stuck in homes that are worth less than that which was paid for them, and they're in variable rate mortgages, seeing their payments increase in some cases by multiple thousands of dollars just over the past year. Given the tough spot that these homeowners find themselves in right now, I think it's more important than ever that these news outlets like the CBC offer realistic solutions for these couples, or at minimum, realistic assessments as to what these homeowners could be facing going forward. With that said, we'll continue to track the real estate market in Canada, in London, Ontario, as well as the Bank of Canada and the interest rates going forward. If you want to get those updates, make sure you click, like, and subscribe. But for now, thanks so much for watching.